Good morning, traders. It is 7:15 a.m. Chicago time, 8:15 a.m. Eastern on Wednesday, the 14th of September, 2016. This is another pre-recorded Trader Bite. Early nourishment for your trading mind. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at what may be driving the market overnight, we have some interesting moves in the bonds along with the indices. Pretty much everything I have is green or up for the morning here, except for the US dollar, the Japanese yen, and crude oil. Crude oil being down 0.8%. 35 cents, trading at 44.56. That's October crude. Looking across the markets, we find that the Hang Seng was down. The CAC is up 0.04%. The FTSE's up 0.58%. The DAX is up 0.41%. And the Euro Stoxx up 0.42%. Overall, I would say that the risk allocation or the capital allocation is towards risk, but not by much. Looking at what's driving the market in the news, an unusual thing happened yesterday and over the last few days. The S&P index has fallen by over 1%, and at the same time, the yields on the benchmark 10-year note have risen by 3%, which means the price of the note, as you may or may not know, goes opposite of the yield. It means that prices on the notes are moving in tandem with prices on the indices, which is very unusual. Generally, money moves from one to the other and back depending on what the risk sentiment is. But essentially, the U.S. 10-year note has risen. The yields have risen by 3% from its previous closing level. This has happened only 36 times, dating back to 1962. And generally, yields continue to rise following that kind of activity historically. Which means that the treasuries continue to fall. We'll look at that in a moment. I looked at treasuries yesterday in yesterday's Trader Bite and was absolutely and perfectly wrong. The treasuries ended up selling off. To me it had the hallmarks of stabilizing, but it did not. UK jobless claims went up unexpectedly. 2,400 people showed. Showed that there were claiming jobless benefits in July above 1,800 consensus. And then, of course, the big news today is Monsanto is accepting Bayer's offer for $128 per share. Both companies are quite large in the stock indices. I don't see anything else since. It's a fairly quiet night. What's ahead this morning is in about 10 minutes here at 7:30 Central, 8:30 Eastern. We're looking for the U.S. import prices month on month, looking for negative 0.1% year on year, negative 2.2% import prices year on year, negative 2.2%. And then at 9:30 Central, 10:30 Eastern, we're looking for crude oil inventories. The number is expected to be at plus 4 million surplus. U.S. gasoline inventories expected at negative 1.3, and U.S. distillate inventories is expected at plus 1.35 million. As far as speakers, there are a lot of different speakers, but nobody really significant. The last of which was ECB speaker Nowotny at 5:30 Central, 6:30 Eastern. It's already passed. And as far as auctions, not much here either. There is there's nothing really significant here. Let's switch gears here and look at follow our routine. This is from yesterday's Trader Bite. You can see the date right here. Oh, let me change that to yellow. There we go. So this is yesterday's Trader Bite. The key expectation yesterday was one, that the market will likely trade inside of the prior 2 days. Remember, we took Friday's range and yesterday's range, and we combined them both into one composite profile. Um, and whoa, look at that square. Beautiful. One composite profile to see where the market was, and we saw that the high volume node is up top, and then there's a secondary node down below. And what I had discussed with you yesterday, if you had watched it, is the expectations for the market to attempt to push higher towards 2140 or so, and then rotate down down into that lower volume node, and then stabilize for the rest of the session, maybe run up at the end of the session as it has before, except for Friday. That did not quite happen. Um, Instead, what it did is it somewhat followed Hypo 2 open auction in range, make an attempt and a push higher towards 2143, and then rotate back down and then test lower all the way down to 2120 or so, and then stabilize somewhere in the middle again, creating a balanced profile for the day. Why? Because we've already auctioned down and looked for sellers. That was Friday. We found our sellers on Monday, and then we auctioned back up to find our buyers. That was Monday. Uh, and then yesterday we were opening right in here. This is not the opening price, but that's where we were at the time of the Trader Bite, 2135.50, which means that somewhere in here we found our seller. We saw that overnight. So the expectation is for it to sit in the middle and trade out. That if we've marked out the seller, we've marked out the buy limits, the next thing, the next natural thing for the market that'll likely do is to balance out in the middle and find equilibrium in between those prices. So in either case, in either one of these plans, hypotheticals yesterday, the market was expected to stay in the middle, and it did. Here's what it looked like. So this is a 4-tick Renko just to keep the chart in the middle, to keep the bars, the chart inside of the screen here. Normally I look at 2-tick Renko, but it's been quite noisy. Here's the push up to 2139. The expectation was a push up here to 2143 per Hypo 2. Didn't quite get there. Nice big rotation down early on, 14.25 points. So the trade was to stock a pullback to the OS low plus mid plus VWAP for short, and then the short would target 24.75 initially, and then target the next high volume node, which is right here, which is exactly where it stopped right there. That trade did not happen. It just did not push high enough. And then we have our chop. Then we get a second bite at the apple here with a nice rotation down 12 points. And then the expectation is for it to push back into the IB low, which is about just above the mid of this last rotation. That trade actually worked, and we're looking for continuation past. This is an impulsive move. We're looking for pullback and continuation past the impulsive move low, 21.16, and there is 21.12.25, and that was pretty much it for the session yesterday. Overall, pretty good balance. The market actually put its balance lower, much lower than I expected. I expected balance to be in between these two LVNs right here. It ended up being lower, and the market ended up also holding strength into the close. attempting to push back into the IB. This is a normal variation day where the market only broke one side of the IB, and that's how things shaped up yesterday. And then this morning in the overnight session, complete balance. Oh, one more thing I want to point out. Look at this volume. This is this card right here is describing this profile. Look at this volume: 2.17 million, 2.7 million, 2.2 million, 1.9 million since last Friday. Remember, the normal or the most common volume for this product is about 1.1 million currently per day. That volume is for the day session only or the pit session only. I don't consider the entire session. Can anybody guess what the reason is that it's trading so much? I'll leave that little riddle up to you. Most of you should know the answer, but we have more than double the volume. Does this mean that there's double the interest in what the market is doing right now or not? If you want answer on Twitter, reply to @FuturesTrader71 @FuturesTrader71. If you want to follow twitter.com/FuturesTrader71. So, on the reopen, the market reopens, balances out, plays out yesterday's close, and bounces off of it, pushes to 21.29 again, 29.75. It pushes the high it put in mid-session at 29.50 by one tick, small one tick failed auction, goes sideways, tests lower, goes all the way back up to 21.29.50 and is sitting in the middle, completely balanced, very Gaussian profile. This point of control is likely to shift up into the middle here. What this is saying, what this volume profile is saying is there is nothing to do here. There's nothing to price in. Again, look at the volume, 216,000. And remember, 200 to 210,000 is the most common for the entire session. And we still have an hour before the open. Again, heavy volume again today. Tell me why. Maybe you can shoot me a tweet and tell me why you think the volume is so heavy. Anyway, so nothing to glean from this profile in the overnight session. It's likely to release itself. The 10-year notes or the treasuries just open. It's likely to release itself one way or another. The only thing, and it's very important, that the only thing we can take away from this profile is to know that something's about to happen. Because when you have a Gaussian profile like that, this has pretty good kurtosis, pretty good fatness to it. There's a fair amount of volume in it. What this is saying is be careful. This is primed to make a move, and that's all we know. But overall, prices just remain sideways in the overnight session. The overnight range is tighter than it's been in the last 3 or 4 sessions, just 8.5 points. And so the expectation here is that we're likely to make a move right after the open, if not before the open. So with that being said, one more thing I wanted to look at with you, and that is the 10-year notes. Now, let me pull up this, what I expected. So here's what I expected for the 10-year notes yesterday. This is what I put out. The market finished, the 10-year note finished strong on Monday on the Brainerd comments. With a pretty nice balanced profile below. The expectation is that would serve as a base right here, and then we're likely to push back in towards the high volume node above and to clean up this trend day down a little bit. And so my expectation is for it to rotate through the gap zone and push higher, and that is not what happened. It couldn't have been more wrong. Here it is. It bounced on the open, and boom, just an explosive move down on the 10-year notes, which means 10-year prices going down, therefore 10-year yields pushing higher. Pullback almost to mid. There's the mid. Pullback almost to mid. It has cleaned up these gap zones here, and with a an attempt at a continuation, and that's where we are. That's where we left it yesterday. And currently, if we zoom in a little bit, you can see there's the new session started at 7:20 Central, just about 10 minutes ago, and it's trading a little bit higher. So pretty good movement there on the 10-year note. It's loosened up quite a bit, and it's likely to continue to drive our trade. This morning, given where we are, again, we're opening in range. If we stay here, if we don't make a move before the open, and there's a lot of time before the open, unfortunately I can't do these trader bites at the normal time and live. If it remains in this area, it's expected to again be an open auction with a wide range. The primary expectation is for an attempt lower, potentially to test the overnight low. We have our point of control below, and then the expectation is for it to start to attempt higher. The reason is we came all the way down to this 2-day range. And by the way, I did not extend this profile, but look at how this profile plays out with yesterday's range and volume. Look at how much is being built below. Look at that. This is some pretty heavy volume coming in here, and you can see that the profile down below is being built pretty heavily with the point of control shifting down and is fairly prominent. So what we have here is a pretty decent base below, in my opinion, and we're likely to shift up and push towards 21 the 2140. So I expect a pullback and then a push through to the CLVN at 2143. That's the primary hypothesis. The secondary hypothesis, I'm looking for an attempt higher, finding sellers, pushing back through, and then continuing to push through back into the 2120. I expect it to bounce up on the first test of the 2120. But then if it breaks through and finds its way down, then we're likely to push through this LVN zone. We have an LVN zone down here, and then we have a double bottom at 2100 and a half. But it's not as significant because it was put in the overnight session. But we have a century figure, which is acting like a magnet for equity indices as well as options. And so that's the secondary hypothesis. The secondary hypothesis creates a lot more opportunity and will increase volatility. Volatility has been holding steady on the VIX between 16.5 and 18. Before that, it was down at 15, 14, and so on. And so there's a potential here for this to release downwards, and that would be your hypo 2. I would love to see this. I'd love to see an early failure and an attempt higher with early failure and then a return and then a push back up for an entry short to catch the trend down. I'd like to be on that opportunity, but who knows what the market has in stock here. Those are your hypotheses. I want to remind you tomorrow. Not many people have signed up so far, but tomorrow you have the opportunity to be a part of the AMA. Please take a moment to register. The registration information is on the page, on the descriptions, the description or the notes in the video below. Take a moment to register, even if you cannot attend. It's at 4:30 Eastern U.S. time tomorrow. If you cannot attend, it's okay. Register so that you can be sent a copy of the video. Good luck, and I'll catch you tomorrow. Take care.